Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's Environment Ministry said on Tuesday it would keep up its system of approving import quotas for solid waste, including scrap metal, until the end of 2020, in a move that will soothe concerns over imminent disruption to supply. Import quotas are periodically issued by the China Solid Waste and Chemicals Management Center, which is under the Environment Ministry. China plans to cut imports of solid waste to zero by the end of 2020, the culmination of a years-long crackdown on foreign garbage, and major shipping lines have already advised customers they will stop accepting cargoes. High-grade copper and aluminium scrap meeting new standards have been reclassified from a waste to a resource and will still be able to enter China.
Moving on to the top news in the energy sector.
OPEC oil output hit the lowest in 2 decades in June as Saudi Arabia and other Gulf Arab members made larger cuts, a Reuters survey found, pushing group compliance in a supply reduction pact above 100% despite incomplete adherence by Iraq and Nigeria. The 13-member Organization of the Petroleum Exporting Countries pumped 22.62 million barrels per day (BPD) on average in June, the survey found, down 1.92 million barrels of oil per day from May's revised figure. OPEC and its allies in April agreed to a record output cut to offset a slump in demand caused by the coronavirus crisis. An easing of lockdowns and lower supply have helped prices LCOC-1 climb above $40 from April's 21-year low of below $16 a barrel. So far in June, they delivered 6.523 million barrels of oil per day of the pledged reduction, equal to 107% compliance, the survey found. Compliance in May was revised up to 77%.
We will now look at the top news in the agricultural sector.
The May U.S. soybean crush is expected to dip to 5.421 million short tons, or 180.7 million bushels, according to the average forecast of 7 analysts surveyed by Reuters ahead of a monthly U.S. Department of Agriculture report. Estimates ranged from 180.0 million bushels to 182.0 million bushels, with a median of 180.5 million bushels.
Next we have agricultural price moves.
Chicago wheat and corn futures fell on Tuesday, after a weekly report from the U.S. Department of Agriculture, USDA, gave an overall positive picture of U.S. crop conditions and harvest progress. Dealers were awaiting the USDA's closely watched estimates of U.S. planted area for the new crop and quarterly grain stocks later on Tuesday. Chicago Board of Trade most active wheat was down 0.8% at $4.82 and 1/4 a bushel, at 10:41 GMT. Corn fell 0.3% to $3.27 and 1/2 a bushel, while soybeans eased 0.03% to $8.61 and 1/4 a bushel.
Arabica coffee futures on ice rose on Tuesday, extending the prior session's steep advance, boosted by short covering triggered both by concerns about cold weather in top producer Brazil and more supportive price charts. Sugar prices also rose, but London cocoa slumped to a 15-month low, with the nearby premium largely evaporating amid concerns about weak demand. September Arabica coffee rose 1.6 cents, or 1.6%, to $1.0170 per pound by 14:03 GMT. October raw sugar was up 0.17 cents, or 1.4%, at 11.94 cents per pound. August white sugar rose $5.30, or 1.5%, to $357.50 a ton. September London cocoa fell 57 pounds, or 3.4%, to £1,625 a ton after setting a 15-month low of £1,623.
We will now take a look at energy price moves.
Oil prices slipped on Tuesday amid rising COVID-19 cases and a possible return of Libyan oil production, which has been down to a trickle since the start of the year. The more active September contract for Brent fell 60 cents, or 1.43%, to $41.25 a barrel by 13:49 GMT, pairing Monday's 92-cent gain. The August contract, which expires on Tuesday, fell 69 cents to $41.02. U.S. crude was down 63 cents, or 1.59%, at $39.07 a barrel.
Moving on to metal price moves.
Copper prices headed for their biggest quarterly rise in 10 years on Tuesday, as resurgent Chinese demand, supply disruption and massive global stimulus powered a rebound from four-year lows hit in March. Benchmark copper on the London Metal Exchange was up 1.4% at $6,043.50 a ton in official trading, its highest since January 23, and up 22% in the last 3 months. The metal used in power and construction is now just below its January high of $6,343, before the coronavirus spread worldwide.
Finally, we have the most recent news on the financial market.
The dollar firmed modestly on Tuesday, lifted by renewed concerns about the spread of the novel coronavirus, as countries around the world and some U.S. states imposed new lockdowns, stalling their paths to economic recovery. Some analysts said the dollar may have also benefited from the month-end and quarterly-end rebalancing flows. In late-morning trading, the dollar index was up 0.1% at 97.530, holding onto overnight gains after upbeat U.S. home sales data boosted Wall Street. On the quarter and month, the dollar was on pace for losses of 1.4% and 0.8% respectively. The dollar also gained versus the yen, up 0.1% at 107.725. The euro, meanwhile, fell 0.3% against the dollar to $1.1212, pressured by data showing underlying price pressures dropped again in the eurozone. That underscored fears that consumer price growth will remain anemic for years. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.